Hello and welcome. In previous lecture, we saw the introductory part of the Indian capital market. In this lecture, I'll be teaching you the characteristics of the Indian capital market and what kind of features are lying under this capital market section. So let's get started. So the first feature or the characteristics of this market is that it connects the savers and the entrepreneurs together. See, a saver is someone who saves his earnings, okay, out of his total income, and the entrepreneur is someone who always needs some investment or some money to invest from outside sources. Now what does capital market actually do is that it brings these two kind of sections of the society or the economy. Instead of saying society, I'll say economy. Together it brings them together and makes one as useful for of the other and other as the first. So the capital market is the place where people in need and people in surplus come together to fulfill their investment needs. See, why did I say people in need and people in surplus? Because a people in need is the entrepreneur, as he always needs investment, and people in surplus is the one who has surplus fund at his disposal and he wants to invest those funds. Now where is the place where he can invest those funds, from where he'll get the more returns or the returns with some maximized money amount? So is the capital market. At capital market, people invest their money. Many people lose it also. But at the majority point of view, people gets their investments at a more rate of returns. Okay. So the capital market is where these two peoples get connected with each other. Capital market is the virtual market which creates links between buyers and sellers. I mentioned this the word virtual here, though you can see some stock exchanges at NSE and BSE. They have their buildings and they have their own names also. They have their own places also. But nowadays, when we are moving to the digitalization era, lots of activities are going on your computer and your smartphones only. So you don't need to visit the BSE and NSE to buy the stocks. You can just buy your stocks from your phone and from your laptop also. So I did mention this word called virtual here. Okay, so capital market is something that that people of different sections from the society gets together and they build up a environment called the investment environment, buying and selling environment. Okay, so the second characteristics of the capital market, that it deals in a medium and long term investment. Unlike the money market where the short term securities get traded only, in the capital market, in previous lecture also I told you that long term and medium term securities gets traded or gets floated into the market, that it helps in raising long term funds for the investment. See, whenever a company needs an investment, it needs it for the long term. It need to buy some machines, it need to buy some equipment for the productive purposes, and that equipment, sorry, cannot give you the returns on the next day only. So it takes some time to to generate the return out of those investment. And so the capital market stand for the long term investment ranging from 5 to 10 years, 20 to 15 to 20 years also gets happen there. So people invest their money for this much long period, and then they get their returns, or they start getting returns from these investments. Also those companies which are buying this kind of investment, or which are raising this kind of investment by selling their stocks, they also need to provide their dividends, or the part of their profit to their investors also. Okay, so it does not deal in the short term financial instruments like bankers acceptance, certificate of deposit, and commercial papers don't get sold into the capital market. Capital market basically deals with the stocks and bonds only. Okay, so the third characteristics of the capital market is the presence of intermediaries. I told you in previous lecture only that Three parties are involved into the capital market. First is buyer, second is seller, and third one is the person or the entity or the agency which is acting, sorry, as a brokerage firm or the intermediary firm. Now these intermediaries are very important. They are the licensed brokers. They have the license of doing these brokerage activities into the capital market. Their main and the basic function of these brokers are is to purchase a security from one person and then sell it to the another person, and middle thing which their profit is something which depends upon your profit, that they will take some kind of proportion out of your profit as their brokerage charges. Okay, so capital market operates with the help of these intermediaries like brokers, underwriter, merchant bankers, and some brokers, collection bankers, etc. Now, the broker need not to have only single person. Some banks also acts as a broker, like HDFC Bank and ICICI Bank. They also have their brokerage accounts with the stock exchanges, and some people are also working as a brokers on their own at their own capacity. See, there are some online companies like IIFL Securities. You must have heard about the Sher Khan. You must have about the stock broker companies like money trading, or the or this different kind of brokerage firms are existing nowadays. They will provide you the environment where you can trade or your investment, your securities, but on their platforms only, and then they'll reduce or they'll take some kind of percentage or the proportion from your profit as their brokerage charges. So the fourth characteristics of the capital market is it is a determinant of rate of capital formation. Now, rate of capital formation is something very important term here. Now, what is meant by capital formation? See, capital formation is the net addition to the existing stock of economical capital. See, capital is something that the economy uh, together keeps with at its disposal. See, whenever we deal with the country or at the larger segment of the economy, we say that we have this kind of GDP or the money at the hands of our people. So what does the capital market actually do? Is it increases the formation rate of capital into your economy. It increases the money formation in your economy, though not actually or though not directly but indirectly. It increases the income of your people, and so it mobilizes the fund on the large scale from the domestic and from the international markets also, that many international players or the many people who are just living on the investing and then earning money from their investment are those people. They actually invest into our economy. We call it the FPI, that the foreign portfolio investors. Those investors are very important, and they does play actually very important role from our point of view, and these people are the ones who actually helps us to increase the capital formation in our country. And the second meaning of capital formation is that whenever a country or whenever a company, sorry, gets the investment out of their stocks, they will invest their money or the generated money from the capital market into some productive purposes, like they'll buy or purchase some machineries, they will set up new plants, or they will employ to those new people, and so the income of the people will rise, or the technology into the economy will increase, or new innovations will happen, and this is how the capital formation will be taking will be done into the economy. So stock or sorry capital markets are a very important, does play a very important role into the process of capital formation. The bookish definition of the capital formation is it increases or the addition or it is the net addition of the stock existing stock of the economic capital. Now, fifth, that it deals in the marketable and non-marketable securities. See, by the marketable securities are the shares and debentures that they gets marketed or they get sold into the market. So we call them the marketable securities. And it non-marketable securities are those term deposits and loans and etc. And stock markets deals in both, that is in marketable and non-marketable securities also. Now, the sixth point or the sixth characteristics of the capital market is that it is the over the counter market. which means that the financial instrument like currencies and stocks are traded and directed between two parties. Okay, so it is the a market where the over the counter process takes place. And now when we are talking about the stock exchanges or the stock markets, uh, to give you the brief idea of the stock market, over the counter markets are something that is very important from our point of view. There are some markets where forward transactions takes place. Now forward transaction is something that you gets into the contract for some future period, for the future date of time. But into the stock market or into the capital market, this kind of future activity that does not takes place. You have to buy securities or the bonds or the stocks at that moment of time or at that moment, and then you have to pay for that moment. Okay, but into the capital market, this kind of, okay, so here you just have to pay at the moment of time, and no forward deal, no forward transaction takes place here, so we call it the over counter market. Okay, so this was all about the characteristics of the stock market or the capital market. Sorry, I'm just repeating this for stocks. But please remember that stocks and the bonds are the part of this capital market. And so this was all about here. In next topic, I'll be teaching you the factors which leads to the development of this capital market, around the world, around the countries of the world, and in India also, that what kind of factors have led the Indian economy to start this kind of capital markets. And so that's it. Till then, thank you. Take care. Stay fit. Stay healthy. Bye bye.